Hey guys, Jay here. This is smarthoming.com. Today we're going to talk about cost plus pricing. This model is built for that. You're going to get a very accurate way to figure out how to allocate cost to different products and figure out what, main reason why people want to figure that out is to price their products. You want to know what it costs so you can figure out how to best price so you're competitive but also making a profit. So you can't really do that unless you have a really good way to allocate the different costs of different activities that are required to produce your product or service. I'm also going to talk about how this can be used for, instead of products, customers. So um, let's start with the first tab, activity cost detail. And just the high level of this, it's called activity-based costing model, ABC costing, and we're going to really dive into all the indirect costs, all the direct costs. And I set this up to handle many products and many different types of activities that are required. You'll see here at the first tab, activity costs, we have 23 potential activities. Now, an activity is something you can quantify and put a cost to. So these are random numbers, random inputs. You'll put in your own data for this. So up top is just activities that are required. So quality inspections, assembly, machining, just anything that you can kind of group into an activity. And you can define all the different costs that go into that. For example, setup technician salaries and periodic cost, you're going to want everything to be on the same period, either annual, monthly, quarterly, whatever. But as you're defining these numbers, they need to be in the same period. So we're going to just look at annual here, just for the sake of explanation. So we want every single cost that we can relate to material handling. So if the setup technician salaries 100% goes to dealing with this, then that's their cost for the period. Overtime pay, benefits and taxes, equipment depreciation, and an activity could have multiple types of equipment, and you would want to take their depreciation for the year and add it up to that activity. Now, if some activities use the same machine, you're going to want to split it up on a pro rata basis, whatever makes the most sense for how much of the machine is used for each activity during the course of a year. Now you're going to have to pull different data from your ERP system, whatever logs you have to figure out how you're using these things for different activities. You're going to want to have all that understood. Um, Tools and supplies, electricity. You might have facility rent. Now for facility rent, let's say the whole rent is, $20,000 a month, or sorry, let's say it's like $2 million a year, big facility. You're going to take the portion of the building that you can apply to material handling and try to get down to that level of granularity. I've put a total of 20 cost items here. So all these cost items go up into this main number. This is the most important number. And that says during the course of a year, you're spending $85,000 on material handling. And then we're going to break this down into units. So you do this for all these different types, and then you go over to the activity rate detail. And now here's all the types going down that we just figured out their total cost. So 85,000 for material handling, 140,000 a year for machining. And so we're going to go each of these going across to the right is what you see now going downward. So here's the total annual cost. This is your actual total annual cost of all these expenses. And now you want to drive the cost into units. So for material handling, what makes the most sense? You could do it per move. Machining might be in hours. Assembly could be how many setups, quality inspection, how many inspections. And over the course of a year, you're trying to input here how many units were used or It's called total cost driver units. So here we're saying there was $85,000 spent for material handling, which was made up of all these individual costs here. And there was 1,000 consumed units of this activity, essentially. And so we get an activity rate. And now by doing this and by getting an activity rate, that's going to allow us in the next step to figure out all the different unit consumptions that a product had for these different categories. And because we have an activity rate, that'll generate their costs. And it's a really nice mapping algorithm to define every single cost of a product and get the most accurate per product cost when you have a lot of indirect and direct costs that go into producing your product or service. Okay, so all that we're doing here on this tab is figuring out what is the activity rate, and the main input is just your unit count here. How many total units during the period are happening of a thing, and these are your activities. Okay, so we have the activity rate. Now we go to the next tab, product cost. So here you have up to, I did 39 products, and this is fairly easy to expand if you wanted to, or you don't have to use it all. And here we say product A, we want to know, and this is all these are formulas here to populate all these. So if you change the in yellow here, the names of these at the top, that will change here. The units will drive what's happening here in this tab. And so for the first one, we have number of moves, which is part of material handling. And we say for product A during the course of a year, and so this is not per product, this is for all of product A that was produced for the year, how many moves were used. And we know up top here that across all products there was 1,000 units used. So we have to split that between the different products now. And then we're going to apply the per unit cost, which is derived here, to this count of units used for the product, which you can see that calculation is happening over here. And then we just add up the row to get the total cost to produce product A during the course of a year. So this says of the total $975,000 in costs allocated across all the products, 2,370 was allocated to product A, and we could back that up by saying this is how many moves were used, this is how many hours of machines were used, this is number of setups, this is number of inspections, and that's across all of product A units produced for the year. So that's what was used. This is the cost. And we can go further in that in the analysis, but I'll go to a couple more. Product B, we're saying they use the most. And you'll know I have defined totals here and reference totals here. The reference totals are taking this amount and saying, okay, you've put into the model, you've got 975,000 costs split across these different things, and these are the total units that you're applying to each activity. So you need to make sure you're assigning all of these to the different products because you're allocating these costs. Now, when you're doing the activity cost detail here, you want to make sure these costs are directly related to the activity. If the salary of the tech, if they only on this activity, if they're only spending maybe half of their time on machine handling and the other half on machining, then you would split their salary between the two, 25,000 each. So you really want to understand only the costs allocated to the activity. Then we're assigning units to each activity that happened during the year. And then we're assigning how much units each product used of that activity to come up with the cost allocated directly to that product. So that's the algorithm. Now we have the analysis where you can get smart on it. So first we want to say, now that we know the cost for each product, which is right here, we want to know how many units were actually produced during the year. And then we can understand what was our cost per unit. So we know every unit, in this one, it cost us $2,370 for product A. We produced 2 units, so our unit cost was $1,185.17. Then we can say if we have a profit margin target of 25%, this is the price we should be charging to reach that target. And then over the course of a year, based on that target margin, this is our revenue. At that price in this unit volume, this would be the cost, and this is the profit for that unit, for that product, I mean. Now, your target margin might not be what you're actually charging, so you can use this tool as well to analyze your current setup and say, well, based on these costs that I've done, and what's your current price for the different products, what's your current profit and loss per unit based on your new analysis of the cost per unit and the total units produced. Okay, well, I am losing in this case on product A $135 a unit. Product B, we're making $63. We could be making 440, well, sorry. We could be making a profit here of 20% if we charge $445 a unit, but because we're only charging $420, we're only making a 15% margin. So we're going to look at target pricing numbers, current pricing numbers, and then compare, well, based on current pricing, this is how much profit we're making for the year. And you can see by product as well. And then what that variance is from our target margins. So in this case, we are making $76,000 less than our profit margin target, assuming we sell this amount and this is the pricing we could have versus what we currently are charging, and obviously based on our costs. And that's the whole model. So it's not too complex, but I think this is very effective. I think it's a good amount of product slots, a good amount of activities that you can assign, and it should fit many situations. You can download this template. Link is in the description box below. I will also be putting it on smarthelping.com. This will be in the accounting section, probably under trackers and tools. Right up top here, it'll be activity-based pricing model for $45 one-time fee. It's also included in the accounting template bundle for $249 one-time fee for a license to all of these different spreadsheets I've built over the years. And remember, if you want modifications, customizations, or work from scratch, I can do all of that. Financial modeling of any type. I do a lot of startup financial modeling as well, not just accounting calculators. My rate's $275 an hour. I'll sit down with you. You can tell me everything you need, what you want to build, and we'll build it. I'm a one-man shop, so it's all me. And I've been doing these models for, well, we're coming up on a decade now of my career in this, and it's been going pretty good. I love what I do. If you want check out more, go to Financial Models tab at the top. There's hundreds of startup financial models here, a lot of three-statement modeling, joint venture stuff, SaaS stuff, real estate models, all sorts of stuff. You can actually get everything for $9.99, or sorry, $4.99. I adjusted the price a couple months ago, and get access to every single financial model on the whole site. And that's lifetime access. If you ever want to update, you can come in and refresh, and I'll ping you the most updated download file for that. Alrighty, like and subscribe, and I will see you on the next one.